Hey, my name's James Oxon and welcome to my YouTube channel. And in this video, we're going to talk about are interest rates going to keep rising despite the big drop that we've had in inflation in the last month or so. Now, this is a really important video for property investors, homeowners, and pretty much anyone that has anything apart from renting a property. In fact, even if you're renting a property, this will impact you because your landlord's going to be impacted by this as well. So make sure you stick around, watch to the end as we unpack what's going on in the property market. Now, make sure that you subscribe to the channel and hit the bell notification and smash the like button, guys. Go on, do that right now. I'll wait for you to do that. That really helps me with the YouTube algorithm. So do that and help me. Now, very quick one before we jump into the content. Did you join the Property Accelerator yet? That's where you can learn all of the property strategies that work in today's market. Things like serviced accommodation, buy, refurbish, refinance, rent, lease options, and all of that for just £1. And I'm going to put a pinned comment below where you can grab yourself a 7-day trial and check it out for yourself. This is the best investment. I'll be personally mentoring you through all of that training and helping you become a property investor. Right now, while the market is volatile, is where the best deals can be found. So, interest rates. What's going on? Well, inflation. That's been an absolute pain. I can't imagine what this is like in countries where you get crazy inflation like 100% or 1,000%, you know, like in Argentina and countries like that. We really have struggled with 10% inflation. And a lot of people say in real world terms, it hasn't been 10%. For a lot of people, it's been 15%. And the ones that have been hit really hard are the poorer people, because for them, the increases in like heating and food costs has been absolutely astronomical. So the government, the Bank of England, they have to get inflation under control. And how you'd normally deal with this is you would put the interest rates up higher than the inflation amount, curb spending, cause a recession, and then eventually the inflation would start going down. People would discount their prices rather than putting them up because they need the sales, because there's not so many customers around, and that gets things sorted. But this inflation was slightly different because it wasn't caused by us overspending. It was because of mainly because of the money printing during the pandemic, and it was caused by the energy crisis. None of that we could control, so they looked at a different strategy by raising interest rates slowly. Now, we've gone 12 meetings with the Bank of England with the interest rates going up. They're now at 4.5% as a base rate. And 2 meetings ago, when it was at 4%, the Bank of England hinted that that was likely at 4%, that would be it. And everything would be under control. And they had data that said inflation was going to come shooting back down. But then it didn't. We went from 10% inflation, then we went to 10.1 or 10.2. It went up for a period of time. We went to 4.2 on the interest rates. Then we were expecting a big drop in inflation. We had a 2% drop down to 8%, 8.7 I think it is. And that wasn't enough. So the interest rates went up to 4.5. Inflation is sticking around, and the word on the street is that interest rates are going to keep rising. The markets have priced in that they feel the interest rate, the base rate, is going to go to 5.5%. That's not great news for anyone. Now, the reason this isn't great news is if you went from 10% to 15%, then that's not good. But you've gone up 50%. We've gone from nearly 0 to 5.5. Now, if you're on an interest-only mortgage, that is insane. If you've got a very, very good deal at the beginning at 1%, and now you get a 5% deal, you could be paying 4 or 5 times more for your borrowed money. So that's going to impact property prices for sure. So what we're seeing here is affordability is getting harder for homeowners. That's causing the property market to slow down. Hasn't quite caused a crash, but we don't know for sure because the data is so delayed. So what does this tell us? Well, banks are scrambling around to try and figure out how can they keep the property market moving, because if they don't get transactions, they don't make money. Every time you get a new mortgage, they make £2,000 as a lump sum. Now, that's pretty good. but they need to be lending money in order to make money. If it stops or slows down, that causes major stress on banks. So what also causes stress on banks is if people get the rents that are going record high, so they're defaulting on payments, they're getting county court judgments, all of these sorts of things are bad for banks. And if people don't pay their mortgages, that's also a carnage for a bank as well. So the Bank of England's got to steady the ship here. And what we're looking at this week, the Federal Reserve, in fact today when I'm recording this, the Federal Reserve is going to announce their new interest rates. And it's expected that they will pause their interest rate hike. However, they are at 4% inflation, we are at 8% inflation. So we're way behind them on dealing with this inflation problem. And so it's going to need some more interest rate rises, whatever, to get these interest rate hikes behind us. And that's what we've got to look at here. So I think in the next meeting, you're going to go up 0.25%. I think you'll be going up to 4.75%. And if you own a house or you've got a mortgage or you've got a deal that comes to an end anytime soon, you need to start looking at your options. It's really important that you have a backup plan, that you have something that you can do here in order to stop these payments being unaffordable for you going forward. Now, if you're in a fixed mortgage, you can actually start negotiating your new deal 6 months prior. You can do that 6 months ahead. And so if you know you're finishing your deal in this end of this year, now's the time to start looking around, speaking to a broker, speaking to your existing lender. I actually did a video before this on what you can do with your existing lender to try and get a better deal than you can see on the market. There's some little strategies in there, so go and check that video out on my channel. But look, interest rates are likely to continue to rise until we start seeing inflation at 4% ourselves. We've got to get it to 2%. But I don't think that if it's at 4%, they're going to be so concerned about hiking rates. I think they might just wait it out at that stage and just see the inflation gradually start to dissipate and start to move down to the 2% target that they've got. That's the key here. And if you are in a position where you want to make sure that you are in a financial security, you need to make sure you get all the knowledge that you can and make sure that you'll really know what's going to work for you. Now, as a property investor, what should you be doing? Well, you need to be looking at really being smart about the strategies that you use. And normal buy-to-let strategies are going to be tough in this market, definitely really tough in London, definitely tough in the southeast, kind of works up north, but you should be looking at high cash flow strategies like HMOs, house of multiple occupancy, like serviced accommodation. These strategies are really going to take you to the next level and help you grow your property portfolio. You need to also be looking at deals where you can add value. Could you add value to the existing property you've got now? Could you add an additional bedroom? Could you refurbish it to make it more valuable as well? So if the market does come down, that doesn't get down valued because you've uplifted the value. And so as a property investor, I would be avoiding vanilla buy-to-let deals. I wouldn't be buying buy-to-lets that are in perfect condition, ready to go, because there's no opportunity to add value to that property. I wouldn't be buying new build properties either. I'd be focusing on ugly houses that need work, that can be turned into high cash flowing properties. That's the secret in this market. That's what's going to make you really successful in property. Now, you can learn all these strategies in the Property Accelerator. As I said at the beginning of the video, it's a £1 trial. Click on the link on the pinned comments. Come and check us out and learn all these strategies. You get a 7-day trial for £1. What's not to like about that? But do check out all the other content on my channel, including this video right here.